right, welcome back everybody. Today I'm going to walk you through exactly how this business owner used a leveraged 179 deduction to save $143,000 in taxes. They didn't have to change CPAs, use aggressive tax schemes, or do anything illegal whatsoever. All they did was implement very basic financial planning-based tax mitigation strategies. Now, when you think about your typical financial advisor, what do they tell you to do? They tell you invest in the S&P 500. Maybe they bring some private equity to the table, et cetera, et cetera. And all those things are great. The problem with those things is the variable is an uncontrollable, right? You're chasing an uncontrollable market return. What I do, on the other hand, is completely different. I focus on the controllables. I deliver controllable returns in the form of tax savings that you can realize regardless of market conditions. If you're paying 35, 40, 50% in taxes, high income W-2, business owner, etc., we're able to deliver that return, usually a higher return in the form of savings. Now, for example, using tiny homes here that you could see below, we are able to create a net savings, not a gross savings, a net take-home savings of $33,000. Now you see right here $143,000 in taxes, and that is true, but the net savings after paying for strategy was $33,000. Now, let's look at the case study. And we're using these tiny homes right here. I'll break that down in just a second. All right, so the case study was for Frank, right? Frank, he's a business owner in Maryland, real case, but I had to, obviously make it anonymous. My compliance department, this was the only case study that I could approve for a YouTube video, but we do have dozens of clients using this strategy right now. The before, as you could see, $800,000 of income. They had a $254,000 tax bill, meaning their net take home was $545,000. When we implemented this very basic strategy, $800,000 of income, same business. We reduced their tax bill by to $110,000. We reduced it by $143,000, but that cost them $100,000. So the $100,000 tiny home purchase, that created a $400,000 deduction. That's why I say it's a leverage deduction. And that increased their take home to $589,000, which was an increase of $33,000. So taxes plus strategy increased take home by $33,000. Now the big picture with all tax planning is you only have two options. You could pay the full tax bill. In this case, it was $254,000. Or you could pay for strategy plus a reduced tax bill to realize a net savings. Now, this does require a cash outlay. In this case, it was $100,000 for the tiny home, and then the remaining taxes of $110,000 for a net savings of $33,000. All right, now, tiny home, a leveraged 179 deduction. What is a tiny home? These are compact living spaces that come complete with a kitchen, bathroom, bedroom, dining room, living areas, etc. Unlike traditional real estate, they are designed to be portable/movable structures that do not require permanent foundations. Actually really cool. This is important because it's how we get the 179 deduction. So what this company does is they send these tiny homes out to the oil fields, typically in Texas. And what they're doing there is they're renting them out to oil field workers. So that's kind of the process that we're working with here. And they live in these instead of living in hotels or things like that. And it creates a really cool tax savings for people like yourself. Now, how is this legal? Well, these qualify for Section 179 deductions because it's considered personal property. Now, Section 179 allows businesses to write off 100% of the cost of qualifying assets in the year they're placed into service, up to $1.25 million. Now, that was the limit at the time I made this video, which was April of 2025. Now, real estate doesn't qualify for Section 179, but IRS rulings have determined that movable structures, such as these tiny homes or portable homes delivered on wheels and used to produce income, are considered personal property and not real estate. This classification makes these tiny homes eligible for Section 179. Disclaimer, this is not tax, legal, accounting advice. This is no advice whatsoever. This is strictly educational use only. Always consult with your tax advisor before making a decision. Now, next steps, if you make over $500,000 a year, pay six figures a year in taxes, $100,000 or more, and are looking to reduce your tax liability and realize a net savings year after year without having to chase market returns, switch CPAs, or do anything shady, I recommend you book a one-on-one meeting with me and we'll discuss financial planning-based tax mitigation strategies. This is the first step in my three-step process. Now, the first step, like I said, introduction meeting, that is where we're going to just talk to each other, figure out your situation, and I'm going to determine if I can help you or not. Then we're going to do a data collection and financial report where I create something like this. If you've seen my other videos, you've seen this case study before, but this is how we took a W-2 employee making $750,000 a year and paying $300,000 a year of taxes down to $68,000 in taxes, and there was a net savings of $97,000 here. So step 2 after our introduction, which is just simply booking a call, is the data collection and the financial report. That's where we go over your numbers right here. And then step 3, if we can save you time and money, or in this case, just a lot of money, it would be the execution of the strategies. So very simple 3-step process I take all of my clients through. Past results, past client results. I want to show you 2 samples that can be considered very basic examples of the impact our planning can have for our clients. Now, keep in mind that every client has a unique situation with different retirement and financial needs. These examples do not encompass the total programs, planning, or services that we provide clients. As you can see here, a $2.5 million income, total taxes of $1 million. With planning, we were able to take that same income down to $146,000 of taxes for a net savings of $600,000. Second example right here, $200,000 of savings, $1.4 million of income of $592,000 of taxes. We were able to take its same income down to $94,000 and save them $200,000. So I will put a report like this together for you, share more about the strategies. All you have to do is use the link below that you'll see in the description to click a time and schedule a meeting one-on-one with me. And then there's also going to be an area where I can send you this document so you could read it, send it to your CPA, etc., walk you through the frequently asked questions that I have, etc. So as always, if you've made it this far, I would really appreciate it if you could subscribe to my YouTube channel to stay up to date with all the information that I provide here on how to ultimately save you time and money, whether it's with mortgage-free life or with tax mitigation strategies, retirement planning, etc. And yeah, that's all I got for you today. Hope you have a great day. Take care. Bye.